In the last couple of minutes, the monthly read on inflation has been released. This, of course, is a vital sign for the Reserve Bank as it considers whether to again raise interest rates next week. Our business editor, Ross Greenwood, is watching the numbers. He's here to explain for us. Ross, how does it all look?
Well, I tell you what, it's lower than expected, and this is probably a decent sign for the Reserve Bank when it does make that interest rate decision next week. So the headline rate, which was sitting at 5.6%, was forecast by markets to be at 5.2%, has come in at 4.9%. So 4.9% means our inflation number is headed down. Now, the important part about this is below 5% and certainly getting closer to where the Reserve Bank has got the cash rate at 4.35%. And that's one of the aims for a central bank, is to try and get that interest rate very, very close to where the inflation number is. So if we go through, you can see quite clearly here the big fall that we're seeing from 5.6 down to 4.9% now, taking it back to where it was in July. But of course, consumer spending, particularly in this last few weeks, especially with Black Friday sales, they've been strong according to retailers. And so really what you're seeing here is various measures of consumer. So you can see where the annual September quarter was going out to 5.4%, but then the monthly rate coming down to 4.9%. So this is actually a pretty important one. During this October period, here are the things that were rising and falling. So you can see the price of clothing is one thing that's actually falling in price during this period of time. But then the price of health is well above that 4.9%. So too transport, housing and food. And that, of course, is annual data going out. But the point is now that the Reserve Bank has got a genuine cause to perhaps pause this interest rate rise, with many expecting another interest rate rise in December, simply to make certain that inflation was quelled and really trying to take demand out of our economy.
Okay, and so how are markets reacting to the numbers today? Do we have any sign on that front yet?
We sure do, and we can show you pretty much what's taking place with live prices as we go through. Let's start with the Australian dollar, shall we? So the Australian dollar before this was sitting around 66.5 US cents. Now here, what you're likely to see is really that the dollar is forecast by many to go out to 70 US cents by Christmas time. But what you can see here is that interest rates, money market interest rates, have popped a little on this news. But, you know, as I say, it's not so bad. The underlying number here is a bit of an issue here for the Reserve Bank to consider. But have a look at this. This is the stock market. The stock market gets a boost when there's no interest rate rises around. And so you can see right there on 11:30 Eastern time, when this came through, the market had been up by about 0.25% going into this number coming out. And you can see now it's up almost 0.5%. And so the fact of the matter is that the markets have taken this very positively. The fact that they now will discount the fact that the Reserve Bank will raise interest rates next week off the back of these better than expected inflation numbers. So in other words, much of what the Reserve Bank is trying to do, preserve jobs. We've heard Michelle Bullock talking about this in Hong Kong in the last little while, while at the same time tackling inflation. It would seem that Australia may very well be on track for the soft landing and preserving many of those jobs that the Reserve Bank and the government so desperately wish for.